Well, hello everyone. My name is Jamal Khan. I'm the chairman and CEO of Churchill Mergers. I've got today here with me Wasim Kudmani of Bridgepoint Law, a specialized law firm in the UAE, and John Hanna, uh, Executive Vice President of Churchill Mergers based in Miami. Today, we're talking about the M&A landscape in the Middle East and Europe and US. What kind of trends we are seeing in these regions, and how what kind of services the lawyers at Bridgepoint Law are providing, especially Wasim, who specializes in M&A. And I want to talk to John about the deals that John is seeing, that I'm seeing, and the trend of inward or outward investments from the MENA region into Europe and USA. Okay, so I'll first ask Wasim to talk a little bit about his business, his firm, Bridgepoint Law, how many staff, and what kind of areas you specialize in, and then we'll go into some more detail. Then I want to get John to speak about some of the areas of the deals that he's doing. And then we'll dig a bit deeper into some of the other areas that we want to cover. Wasim?
Yeah, thanks. Thanks, Jamal. My name is Wasim. I'm a managing partner at Bridgepoint Law based in UAE. We have a boutique law firm having a team from different nationalities, from Middle East, from Europe, from States. And they are professional legal experts in different sectors. We provide our clients mainly with the corporate services, including M&A and other corporate legal services for helping our clients and supporting their business and their practice in the region. We help our client on daily basis for their legal documents, due diligence, and also enforcement of the arbitration awards. And we also think about UAE. When we talk about UAE, we talk about a very international country. It become a very international place for investors. We are meeting people nowadays every day from different countries coming to this region to open fund, to open private fund, to open family office. So we also helping people and clients with this structure. We have very unique system here. We have two different systems in the UAE. One is subject to the common law, one is subject to civil law. So it's very convenient legal environment for the investors here. I'm working closely with Jamal and John as well in M&A transactions, and I'm happy to be here to discuss how we can present the idea and the process of M&A transactions in the UAE.
Fantastic. Thank you, Wasim. Once again, you're a senior partner at Bridgepoint Law. And in the last few months, what kind of activity are you seeing? Are you seeing inward investments, outward investments from the MENA or Middle Eastern region, UAE region? I know you're based in Dubai. So what kind of trends are you seeing?
I've seen a lot of family offices, also many funds are excited, and they are doing actually. They're opening their branch in the UAE, in Dubai, and Abu Dhabi, in particular HGM and DIFC, which are very convenient territories for the financial institutions. So recently we had received a lot of inquiries from Europe, from States, from Japan. Clients, they wanted to open their branch for their family office, for their also investment holding entities, to be placed in the UAE, where they own and having this structure to own the whole subsidiaries, their subsidiaries around the world. So yeah, we have actually experienced a very significant requests from many countries recently for to open and helping them to place their financial institutions in this region.
So thank you for that. That's very useful. What kind of uh, subsidiaries do they set up? So is it to put their investments here, or or trading entities here, or to trade within the UAE region, or to have a kind of a holding company within the UAE? What kind of structures are you seeing?
I'm seeing two structures. I see the first structure is to receive to 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 set up the holding entity, which would receive the profits and dividends, which is basically the idea of holding, is to receive the dividends and also to hold shares in other subsidiaries. But the idea is the two concepts is this is the first one, which would be holding the shares of other subsidiaries in the region, which subsidiaries might be manufacturing, might be trading, might be in Saudi, in Egypt, in Lebanon, in Europe, in doesn't matter. But they I faced many cases where they have like 20 subsidiaries around the world. But the other also kind of structure where the investors wanted to have, instead of opening a family office, they would have a consortium under a holding company where they can bring investors under this holding company, and also opening a new SPVs, opening another subsidiaries, opening another entities under this holding, and that would be the whole structure would be under the umbrella of the holding. So there are two types of holding or structures that would people now or investors wanted to have it as a holding company.
Excellent. And what kind of services do you provide if somebody wants to set up a holding company or an investment or a fund here? How would you be? What kind of services what do you provide, end to end or turnkey solution, or do you work with other advisors locally?
Yeah, we do. We do both. We help them out, first of all, to understand the concept, to understand the structure, to discuss and have maybe numerous of meetings, multi meetings to understand their idea and their structure and their plans for their business. And then we provide the structure for them, how to build it, how to structure it, which jurisdiction, which area, which free zone. We advise them what are the advantages of this and that. What is a tax, um, let's say, holiday or tax regime is good for their business. Uh, and then we will build it up, we'll create it, design it, present it to them, approve that structure, and then we can go to the authority, to the regulator, and submit this structure. And from there, we will present all KYC, due diligence, all things required by the regulator to set this entity up, and then later on, once it's established and what once it's formed and the license issued by the authority, then we can also engage the tax and financial advisors who would work side with us side by side with us on delivering the package, or the 360 solutions we call it, for the client to be satisfied in terms of the legal aspect and the legal and tax and financial aspects.
Fantastic.
Yeah.
And how long does it take for you to create a structure?
To create a structure and to form the company or form the structure will take around, let's say, between the 3 to 6 weeks. Sorry.
3 to 6 weeks.
Yeah.
And this could be with ADGM, this could be with DIFC, or maybe a free zone.
Yeah, it depends. Depends on their business nature. Depends on how they do, or how they what is the nature of their business. We decide and advise accordingly.
Excellent. Great. Well, we'll come back to you in a few moments, Wasim.
Yeah.
John, I know we work for the same group, but you're heading the US operations for Churchill Mergers. Do you want to give us some idea of what's happening on the US side in terms of M&A? How is the market behaving at the moment under the new administration? How are the deals performing? What's the appetite for investors or private equity funds? Yeah, over to you.
Thank you, Jamal. It's a very interesting question that you're asking, Jamal. Fortunately or unfortunately, there is a serious exit in the M&A world in the United States. The instability of the tariff has created issues that a lot of people don't know whether they should continue investing in CapEx or they should just exit and lick their wound and move on. So the seriousness of what's going on with the administration today, it's impacting the world of M&A in a bigger way than anticipated when they were elected in office. There is also an age bracket that a lot of companies with mature management ownership are exiting simply because of there's no family member that will take over from them. Okay, so that in addition to what the issues we're facing with tariffs and the instability of the market, it's creating a serious amount of request to the Churchill Mergers world in the M&A world as well, with reference to just can we exit? How much can we exit for? What's the valuation of our business? Can we expand the business? What do we do with our once we to get the settlement and the funds, what can we do with this? What's our tax brackets issues are we going to be facing? So there are a number of questions that we discuss on a daily basis. Okay. The one thing that I have to bring to the table, Jamal, we don't only deal with US-based companies, we also deal with international companies, as you know. Okay. So because we've been what's interesting is because I personally been at the operating chief executive officers of a number of companies. So I feel the pain of some of the owners or the management that run the company. So I understand exactly what their needs are. So when we speak, okay, we speak with experience and recognition of what their needs are. And having said that, and the point I was trying to make with the fact that we've been in the operation side, that a lot of companies, both domestically and internationally, are coming to us for help to exit. Okay, Jamal, you and I have been working on a number of projects, not only in the U.S., but overseas, and in addition to what we see in the United States. But to me, it becomes a global thing. What's interesting, however, and I like to ask Wasim, is a lot of Americans are very intrigued, with the Dubai setup, and they really don't know what is the advantage or disadvantage for an American company. Maybe a multinational company understands it better because they have their own legal team and whatever in-house. But a lot of guys that run companies that do $50-100 million, they're very intrigued of what to do in the Middle East. I'm not sure if it helps the Americans. Maybe we can talk about this or not, an American company or not, from a tax point of view, from possibly even setting head offices or operation in Dubai. Maybe we could touch base on that because I get the question asked a lot. Okay, so.
Yeah, of course, that's, Jean, after all, I told Jamal that we cannot advise on tax and finance issues. That's
Yeah.
why we engage experts, very senior experts like you and Jamal, to work together on providing and giving the solid advice and very professional advice and support to the clients to understand what is the effect and what is the consequences, what are the risks in terms of tax and finance issues. Yeah.
I think, John, as you know, one of my other businesses is where I act as a tax advisor for, but that's UK based essentially, and based on my knowledge of international tax, if a company is being set up in the UAE or a holding company, we need to have effective management and control happening from a holding company. Otherwise, the structure is pointless. So effective management and control and a permanent establishment, this is what's normally covered between the double tax treaties between two countries. And I think the same would apply between the US and UAE. The only thing that's changed recently, and that would require more local and specialist input, is the tariffs. On if invoices are being raised, how do the tariffs affect that? And that's something that's still, because I've had conversations last week about what was happening before. Yes, if you have a management structure in place, but you do need to have the right now, because of the tariffs, the playing field has changed a lot. Companies are losing contracts because of tariffs. Companies are choosing not to trade with the US or having to find alternate routes. And that's a more specialized discussion. I think we'll be having one of our guests talk about the tariffs in the next few weeks and how, especially specifically for the US, things have changed. For the UK, Europe, things haven't changed a lot recently. So as long as you have the right structure within the Middle East or UAE or Dubai or Abu Dhabi, it can be very useful. John, I wanted to understand from your perspective what's happening. What are you seeing in terms of, because I know you have a lot of background in the fashion world and you have been a very successful executive of many fashion brands. What kind of trends are you seeing in the fashion world or private equity coming into the fashion world, or investors coming into the fashion world?
Thank you, Jamal. Again, it's interesting that you brought this specifically fashion world as a point of discussion. Pre-COVID, there was a lot of acquisition, private equity, family offices were jumping on brands, and IPs becomes very essential in the business of fashion. And the multiples back then were so significantly high, were significantly high that as we all know, that there's a lifetime of an investment, maybe 3 to 7 years, most of it about the 5 years they want to exit. So a lot of the private equity family office that acquired family fashion brands prior to COVID paid multiples in the 15x to 20x of EBITDAs. Okay, and today in market they cannot get beyond 4 to 5x EBITDA. So there is a bloodbath going on, frankly speaking, in the fashion world, and that is something that is happening, in the U.S. brands. To add to that, the tariffs have created another mess for some of these fashion brands. If some of the brands are very well brands. They manufacture in countries like China, countries like India, countries like Pakistan, countries like Italy. And when you look at the tariff numbers, in some cases they've gone to 150%. So from 10, 15%. Okay, so there is instability that's across the board. I know of a specific brand that was acquired pre-COVID for $500 million to a public company without mentioning any names, and they just recently sold it out to another public company for $100 million. They've lost over $400 million in 5 years. Okay, so it is a serious matter, and we don't know where it's going to end to be, or how we're gonna get out of it. But it's a learning curve every day. Yeah.
Right, and so there is that's in the fashion world. And do you think this is because of the tariffs, or there are other factors as well?
They started by the fact that they've overpaid for brands. Like I said earlier, 15 times EBITDA and 20 times EBITDA. And I know a number of brands that were making $150 million, but the IP carried enough weight that they paid $1 billion for acquisition. Okay, and they tried to exit that brand today. They cannot even get 10-15% of what they paid into it. So that is one serious issue. Okay, and there was a lot of excitement about the brand and the growth potential. So they looked. It's a forward-looking acquisition. Okay, that hasn't happened. Now, what in addition to that, with the tariff, it created even a downward sales revenue streams, as opposed to increasing the revenue. So it created a downward revenue streams, which also taken away from the potential value of the actual brand. So unfortunately it's a double issue that we're dealing with. And I think today in the M&A world, it's a great time to acquire brands at a much lower price points that anticipated 5 years or paid for 5 years ago. So,
So do you think these brands will then regain their valuations in a couple of years?
If it's managed right, if it's rebranded correctly, if the tariff again is still an unstable thing, you might have to move countries for production point of view. You have to start looking at your overhead cost, and live within your means. I think there is potential, because unfortunately in the world and for the fashion, we live and die by IPs. Okay, we live and die by by brands. Okay, there are actually people in the world of music. They sing about brands. They word of movies. They put brands in film. So brands are such an important element of our lifestyle. And I usually use that example. If you take the badge of a Mercedes-Benz, put it on a Volkswagen, all of a sudden, that Volkswagen will look more expensive. So IPs are so essential. Branding, badges are very important.
Excellent. Well, thank you for that. Wasim, are you seeing any major brands shifting their headquarters to the Middle Eastern region? Not specifically with your firm, but generally, are you seeing anything like that in the MENA region?
I've seen multi-funds moving from New York, actually, to Abu Dhabi.
Okay.
I've seen many Chinese companies, mega companies, moving their or opening their region headquarter in Dubai. Yeah, I've seen a lot recently moving, opening their branches and offices. I cannot disclose the names
Of course, no,
from
please don't.
my firm, but yeah, of course, we have very big firms and big groups moving and opening their offices, moving from the region as itself, not just from Europe or from the region, moving to Dubai, from Egypt, from Morocco, to have their base or the umbrella in the UAE for their business.
I have a question, Jamal and Wasim, if you don't mind me interrupting.
Yeah.
Is that when we say moving their head office, are you moving manufacturing base into Dubai or?
Manufacturing their money as well, and as a funds, as a capital of investment, to have it to have this location as a base for bringing to more investors to their projects, or to attracting investors from the UAE and Saudi as well. So yeah, moving factories, because now if you, I don't know if you heard from the news that now the UAE government now focusing on manufacturing plans, moving encouraging people to open their factories in the region, and they have the infrastructure, very good infrastructure for the manufacturing, including electricity, for water, labor, ports, airports, very good infrastructure for, especially after the COVID, the supply chain is very important now in the region. So people now notice that the cost is not the matter. It's the supply chain is a matter. That's why the region now focusing on, let's say, food security. They are focusing on the major products to be produced in the region. That's why they are encouraging every especially for food processing, for let's say technology tools, for many things that the country needed, medical, let's say, medical production now. You can say a very significant increasement in the production.
Is the government offering any subsidies for such production?
Sorry?
Is the government in the region or the UAE offering any subsidies for starting manufacturing operations in this country, or any specific kind of anything to kind of entice people to start their production and operations here rather than just holding companies?
If you have a plan, and that's Bridgepoint also can do for the clients. We can present your project to the government. We can put it on the government and see what incentives we can get from the government. Maybe free land, maybe free tax for a period of time, maybe a lot of things we can get it from the government. We can present the project, and the government will depends on your line of business, line of production. If they, if I, what, as I said, if it is aligned with the government strategy, then they will put all the benefits and supports for this project. Yes, sometimes they grant land, sometimes they grant free things for the project. It depends.
This is really good. This is so, and you can help with these business plans.
Absolutely, and even we can find a strategic partner. Sometimes we bring from our contacts strategic partners for the factories, or for the new factories, or the new companies that they wanted to open their factories here. Yeah, of course.
Fantastic. Well, look, we were expecting this to take no more than 15 minutes, and we've already been speaking for a much longer time. And I think if this is because this is a very interesting discussion, and this can carry on.
Absolutely.
So people can get in touch with you through your website at Bridgepoint Law, and I'm hoping you will get some inquiries in the coming weeks and in the months.
My pleasure. It's my pleasure.
And I appreciate you've got another commitment. It's been an absolute pleasure speaking with you, Wasim. John, thank you for joining again. And we will be having some more webinars and some podcasts, and maybe we can invite you again, Wasim, about some specific cases.
I would love to join. Of course, it's my pleasure. Great. All the time to be.
Thank you, everyone.